Over the past few years, we have received a lot of questions about why Bitcoin has not reached mainstream adoption yet, after 11 years of existence. But before trying to solve this puzzle, we ask ourselves two critical questions. Number one, what is the most popular way to get Bitcoins? And number two, is this accessible to everyone with an internet connection? So to the first question, the most popular way to get Bitcoins is by opening an account with a crypto asset exchange. And as of yesterday, exchanges recorded around $120 billion in trading volume. And the response to the second question is the purpose of this presentation. So please bear with me. In an attempt to respond with empirical data to this question, we conducted a study to understand who is eligible to access crypto exchanges. But before going into the details, it is important to note that exchanges are not the only services available to acquire Bitcoins, but they are the main fiat currency gateway to access cryptocurrencies. So the methodology of our study was in two steps. Number one, we took a sample of 100 exchanges launched over the past 9 years. And secondly, we investigated the terms and conditions available on their website that everyone must agree to in order to open an account. While crypto assets like Bitcoin are issued in a decentralized manner and accessible over the internet, exchanges, by contrast, are centralized and for-profit organizations that must comply with their jurisdictions. And the results of our study attest that exchanges are not making Bitcoin and other crypto assets accessible to everyone with an internet connection, mainly due to regulatory concerns. And in addition to that, we discovered that some of these exchanges shut down, leading investors to seek alternatives. Now let's get into the weeds of the study. We discovered that 52 out of 100 exchanges explicitly impose restrictions on users from specific locations. And among them, on the next slide, there are names I'm sure you're familiar with, such as Coinbase, Binance, or Kraken, right? A total of 98 countries were commonly mentioned across the terms and conditions. And I'm sure some of you might have their suspicions, right? And in fact, the most restricted locations or countries sanctioned by the United Nations, such as Iran, North Korea, and Syria, or countries blacklisted by the Financial Action Task Force, which is an international institution fighting money laundering or terrorism financing. But guess what? To our great surprise, as you can see on this chart, the United States figure in the list of the most banned countries, with exchanges such as UOB or eBTC preventing US citizens and residents from opening an account. So most of the exchanges in the sample are still operating till these days. However, we discovered that 27 of them either filed for bankruptcy or shut down in the midst of regulatory pressure. In other cases, we witnessed controversial closures where exchanges' owners reportedly disappeared with investors' funds, such as Bitsane. Interestingly, the state of the crypto market today shares a lot of similarities with the internet in the early 90s. And this indicates that we are still in the early phase of the Bitcoin adoption curve, even though the Bitcoin network launched 11 years ago. So now let's dive into their similitudes. Number one, the number of users. It is quite challenging for us to estimate the real number of people using crypto today, but it is reported in many reports that 30 million people own crypto assets. And to put things in perspectives, in 1996, 30 million people had access to the internet. Second point, hacks. In 1996, hackers changed the website of the Department of Justice, the CIA, and the US Air Force. Similarly, in the crypto world, last year, Binance, a cryptocurrency exchange, reported that $40 million were stolen by hackers. And the last common point is the user experience. In the 90s, online payment services before PayPal were not user-friendly and required special knowledge of data transfer protocol to use them. And the experience with exchanges is quite similar today. In fact, market participants are advised to store their crypto assets in cold storage to prevent any loss from hacks, which triggers a lot of friction in the process. And on the final note, the silver lining is the future seems bright because there is a lot of innovation happening in the crypto market to push the adoption forward, such as 21Shares ETPs, which enable both retail and institutional investors to invest in crypto safely through their traditional brokerage accounts.